Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at oil and on the daily time frame, again, I've been saying in these videos the choppy action is not good for swing trading, and that's still the case. We keep rejecting from 53.50. Look at all these upper wicks rejecting from that range the past couple of weeks. But green to red to green and then fake outs, and there's just no clear direction on the daily time frame at this point. So there's still definitely day trading opportunities, but if you had to choose, I would choose bullish because obviously the overall trend looking back at the past few months does favor the bulls. But in terms of confidence, not confident at all with short-term daily direction. So sticking to day trading, jumping in and out quick, and keeping that cash liquid. Very clearly, $54 is a psychological resistance level looking on the daily chart with about 8 to 9 rejections at this point. And we need to see a daily chart or a daily candlestick close above $54 to make a bullish break of this pattern. So just while I was talking here, I drew this uptrend support line and that clear horizontal resistance line to be keeping an eye on, and definitely going to see a break of this tightening range sometime in the next week or two. We'll see if the inventory report tomorrow gives us some momentum and catalyst in a certain direction. Let's look at the hourly time frame, and we had some resistance where we broke the lower high pattern. We had 53.43, we got up to 53.54, and now we're looking to form a higher low. So we have a low at 52.22, a higher low at 52.61. Bulls want to maintain that higher low and make another move back up towards 53.54, the high of today resistance. So trying to progress in the sense of forming those higher lows. And the 52.20 level is a must-hold support because we have a low at 52.20 and 52.22. And if we lose those levels, then we're keeping our sights on this gap fill down here. So essentially, the range to be watching is 52.20 support, 54 resistance, and watching the trends in between, as the hourly chart does definitely have a lot of play back and forth with regard to fitting within that channel. And you can see we have been within this channel now since January 20th, so almost 2 weeks at this point, bouncing off support, rejecting from resistance, a little double top, now a little double bottom at support, and here we are waiting for a clear direction. So if you are a trader that is agile and jumping around in other sectors and other names, you are waiting for a clear break with $54 becoming support, or a clear bear break with losing 52.20 support. If you want to eliminate the most risk, you're going to eliminate some reward, no doubt, but you're going to eliminate a ton of risk by waiting for a clear break of one of those two levels. Looking at USO, we can see just how tight we are and pretty much can't get any tighter. Looking like we're going to see a close above the middle Bollinger Band or below the 50-day moving average tomorrow. And you can see this range, higher lows, lower highs, still getting very tight. So it is looking like this inventory report is going to be a catalyst for short-term direction. Weekly time frame, like I said, if you had to choose a position, you're choosing bullish because of the trend of 2016, and we are still holding that uptrend. Weekly middle Bollinger Band support 1109 on USO, and $11 is key support as well. The lows 11.06, 11.07, 11.08. So there's lots of support in the low $11 range, and we need to see the bulls get above 11.63 resistance to have confidence heading forward. So me personally, I have plenty of stuff to be watching, so I'm not making any real trades until I see a clear break of resistance or a clear loss of support. And once we eliminate this chop seen on the daily chart over the past 2 weeks of trading. So we'll check back in tomorrow after the inventory report. We'll see if that's the catalyst to give us a clear break of one of these levels, and I will see you then. Thanks for watching.